You're with us here on a fresh new edition of Taking Stock. This is the show where we wrap up what has happened over the last 5 trading sessions, the week which has gone by. But more importantly, we tell you what to watch out for in the week ahead. We prepare you for that in terms of cues to watch out for. I'm Prashant. With me today, my colleague Sonia Shenoy. Hi, Sonia.
Hi Prashant, good evening. It's been really a hectic week, right? I mean, the markets are back in the red for the week after gaining in the prior 2 weeks. And I think it's this whole Franklin Templeton issue where they decided to close 6 of their debt schemes overnight that really hit sentiment this time around. So we'll talk in greater detail, but first let's tell you the guests who are joining us in the next half an hour to discuss how to approach the weeks to come. Andrew Holland, the Chief Executive Officer at Avendus Capital, will be joining us, and in a bit we'll be joined by Ayon Mukhopadhyay, who is the Director Institutional Equities at IIFL. It's been a really hectic week, but before Prashant and I talk about the week, my colleague Sonal is here to tell us about all the stocks that were in focus this week. Sonal.
Yeah, thanks a lot for that. Well, yes, the markets were in the red, but there was one sector that did really well. Nifty Pharma, the top sectoral gainer, up around 4%, followed by Nifty Energy. But that is not it. There were big losers as well. So we had Nifty Metal Index down around 10%, followed by Realty, and Auto Index also saw losses of almost 5%. Now let's talk about the Nifty gainers. And without doubt, it was Reliance Industries up 16% this week. That is because of the Facebook investment in Reliance Jio, followed by the FMCG name, something like Britannia and Asian Paints that did really well. We also had Sun Pharma seeing uptick of around 6%. But on the downside, there was a big decline in the financials this time around. So we had IndusInd Bank coming up with numbers on Monday, down 20%. Axis Bank, the Bajaj Twins, and ICICI Bank all declining between 10 to 20%. Let's talk about the broader markets then. We had gains coming in for the pharma names again. Oro Pharma, Glenmark, Lupin. Again, an FMCG company, Colgate, did well, 8% up. Tata Elxsi, after reporting decent set of numbers, also saw an up move of around 5%. But again, the list of losers is even bigger. We have the NBFC names. A lot of pressure on NBFCs this week. So we saw all of them declining, and some banking names as well. For instance, RBL Bank and IDFC First Bank. Apart from that, the other names, the likes of HDFC Life, ICICI Pru, the insurance companies, because of low premium growth in the month of March. We also had PVR and Indigo. These companies continued their decline this week itself. Back to you.
Thanks a lot for that, Sonal. So those were all the stocks in the news this week. The Nifty Bank was very important this week because it erased gains of the last week. In fact, it was down almost about 5% this week. And the leaders of the market this week clearly were Reliance, as Sonal was just pointing out. It gained quite a bit post that Facebook Rel Jio deal. However, I do want to point out that one of the big stocks of this week was Bajaj Finance. It had a massive fall. In fact, a lot of the consumer finance companies were under pressure. Bajaj Finance slipped below that 2,000 rupee per share mark, ended at a 7-month closing low. So Prashant, you know, we had a lot to deal with this week, but next week is a truncated one, and it seems like this Franklin Templeton issue is not is not out of the way just yet. There could be some spillover effect as well.
Oh, absolutely, Sonia. Let me just start right at the beginning in terms of the top down. The top down is that the market is going to focus on what kind of progress is made on any kind of drugs or vaccines, etc., with regards to COVID-19. Remember, the reason why the sentiment globally on Friday took a big knock was also because the Financial Times had reported that the first trial for Remdesivir, which is being sort of under trial, it's a drug owned by Gilead Pharma. I mean, that has flopped. That's the first trial. I mean, markets had, remember, the week before this rallied quite a bit on hopes, on reports that, well, patients who had been under treatment under treatment and were being given that drug were actually recovering pretty fast. So I think that's broadly the number one thing to watch out for. Will we see anything next week? Hard to say, and news flow on that regard can hit us from many fronts. Well, the other point is that, as we wound down the day on Friday, we got news that there is no stimulus package yet here in India. That is again something which markets will react to on Monday. Our colleague Timsy reported that, work is underway. The finance minister and the prime minister sort of have discussed things, but they need to be convinced of the measures to be taken, and that may take some time. We don't have any confirmation about timelines, etc. But markets have been looking for something for a while now, and then to boot, we have this entire Franklin Templeton issue, and I don't think we've seen the last of it. These kind of episodes in financial markets always have it shows up in different places, unexpected places, and equity markets could be one of them. We saw some of that, of course, play out on Friday as well, and that's the reason why financials remain the pain point. The Nifty is down 1% this week. The week gone by, the Bank Nifty is down about 5.5%, as you said. So it's very clear where the problem is. And within financials, it is NBFCs. Bajaj Finance, for example, under 2,000 rupees now. Last but not the least, this is a point that I've been making now for the past 4 or 5 days, that the Nifty has completed what is a textbook 38% retracement of the fall from 12,400 levels to the absolute low of 7,511. It's gone exactly to the 38% retracement, and it's sold off from there. Is it telling us that maybe, for now things are done and we kind of head back down a little bit? It probably may be the case. But then, when we come back, we'll have, of course, global markets, etc., to react to. But I think it may also be the case that the US market, which is doing much better as compared to many emerging markets, may continue on that path while we start to diverge a little bit and take our own road ahead. And there are good reasons for that. There has been tremendous stimulus there. There has been very little to talk about here, and other issues as well. So I think it's going to be another interesting week after the kind of last 5 days that we've had. Sonia.
Okay, all right, Prashant. Yes, there's in fact lots coming up. Next week is a truncated week as well. So once again, we have just a 4-day week. But I take your point entirely. This whole Franklin Templeton issue is something that is just going to be an overhang on the markets, at least until you get a sense of which way things are headed. There could be some massive selling by FIs as well because of this Franklin Templeton issue. But we have Andrew Holland, the Chief Executive Officer at Avendus Capital, who joins in now. And in a bit, we will be joined by Ayan Mukhopadhyay, the Director Institutional Equities at IIFL. If Andrew's with us, I just want to go across to him first up. Andrew, this has been a really challenging week for the markets. In fact, the going was good, but then we had a couple of setbacks. First, it was the massive slide in crude, and now we have this whole Franklin Templeton issue. On this Franklin Templeton crisis itself, what is your recommendation to investors? Is this a time to sort of pull out of the funds because there could be major panic selling, or one should just ride it out?
So I think, it depends on which credit fund you're in, but I think a lot of the major mutual funds have already come out with statements saying that, they have liquidity and so therefore not to worry. I think, there's two things here. One is obviously there has been quite a lot of redemptions, from mutual funds. And they don't have anywhere to go in terms of borrowing. So, I think the RBI, as they have done in the past, should open a window for them just to ease them through this, this short-term pain. Because obviously, so the credit market itself has got a big problem, and that's what it's. The underlying reason is that, not necessarily that there's problems with the mutual funds, in that they don't want to sell down at distressed prices. And therefore incur losses. So therefore they'd really get some borrowings to get through this and have a more normal market for them to sell in the future. So I think that's been the problem. But as I said, some of the major mutual funds have come out with statements to say that they're all fine.
Okay, well, we'll know, only time will tell. But, Andrew, I do want a follow-up on what this means for certain financial sectors. NBFCs, for example, today we saw a massive slide. In fact, this week we saw a massive slide in Bajaj Finance. The stock is down 60% in just 3 months. Do you think there's more pain for some of these marquee consumer finance companies? Or is this a good time to be putting some money to work here?
So I just think there's a lot of fear at the moment, and I think that the problem is that what the RBI has done is good in its intent, but in terms of transmission, it's just not working, because If you're a bank, you just don't want to take any assets or any risk in terms of lending. Therefore, I still think the RBI, and I said this before, either have to kind of create a bad bank for the banks to kind of put some of the existing non-performing loans in, so they feel kind of without the kind of problems of a weak balance sheet to then go and lend to companies. It's all about working capital, right? That companies need, or backstop them, or backstop the banks in terms of their lending for a certain period of time, so they can make fresh loans. But until you do that, everyone's risk averse. Why do you need to take more risk at this stage, particularly given that we're still under lockdown? And the reason that obviously that there's a problem for the NBFCs is that, and particularly the retail kind of facing NBFCs, is that who's paying? When can you go out there and collect money? And everyone's saying, oh, there's a moratorium and this and that. So there's no real relief for the NBFCs, either from that problem of not collecting money, but also the fact that they're not getting money from the bank. So that's where the problem lies. So I think the RBI just has to step in and go the extra mile here and just backstop the banks, so they don't have to worry about extra non-performing loans going forward.
Okay, Andrew, point taken. Just coming to you. Let me get in Ayon Mukhopadhyay also into the conversation. Ayon, thanks very much for joining us. Is the market fairly valued now? Is it pricing in the risks of earnings disappointment, etc.? Or do you sense some, latent optimism that things may turn around, and it may be whenever the lockdown lifts, it may be a very sharp recovery. Just put that in context for us, Ayon, briefly.
Yeah, hi, good afternoon, viewers. Good afternoon, all. I think if you look at the markets, I think the markets have recovered from its bottom, and I think right now the fall is in line with most global markets, and in that way, I think you can say that India's fall is in line with global markets. Now, the way that we look at it is that there are two ways to look at it. One is, if you consider that what were the market valuations before the whole lockdown and whole corona syndrome, and the general consensus at that point was that Indian markets were slightly overvalued, or considerably overvalued vis-a-vis earnings. What were the earnings optimism to come through? Now, we really do not really know what would be the earnings cut. FY21, most analysts have said, really that will be a sort of a wash down, and we really cannot think that. But if you look at the earnings cut, FY22, we really have not seen really major cuts coming through. So if you look at the earnings multiple on an FY22 basis, we really have not seen that much cuts happening. So on that basis, is the market really cheap? I would not really say so. So if you say the fall that has happened really has happened on the basis of FY21 earnings cut, whatever has happened, and we do not know the fall that has happened. And on your point of whether the recovery will happen, whether it will be a very sharp recovery or will it be a slow recovery, I think right now it will be completely on a function of what the underlying economy will be. And I think at that point, and right now, initially any market movement was exaggerated both on the downside as well as the upside. So we had an exaggerated fall in line with most global markets when the market fell as it did. And then it sort of reached a sort of a bottom, and then it rallied again in line with most global markets. But right now, I feel that markets I think it will be more of sectoral and stock-specific rallies that will happen going forward.
Oh, absolutely. At some level, Ayon, you almost sense that fear of missing out kind of feeling playing out, right, in many areas. If I don't get it right at the bottom, I'm going to miss this big upside. The point is, and this is to both of you, briefly, if you can answer this, is there reason to get very excited right now? The earnings journey is going to be pretty treacherous.
Well, the thing is, without going into specific stocks, if I just can give you an example, if you see the movement that we saw in Reliance over the last 3 weeks, for example, it's not really a fear of missing out, but it is more of, if people are convinced that if the recovery is beyond earnings, and if you have a story playing out over many years, people will buy a particular stock. So again, I'm not going to go into specific stocks or give you a thesis on what I feel about that stock, but I'm just giving you an example as to what we saw in the rally of Reliance is a testament to that Reliance movement didn't really happen because you had massive earnings upgrade happening with the Facebook deal or whatever, but it was when people really thought that this event that happened with Reliance could propel into a different trajectory. And then, you saw a huge rally happening from its lows, and the stock, I think, has recovered 60% from its low. And if we're not talking about a mid-cap stock, we're talking about India's highest capitalized stock. So in that way, I think, specific stocks and specific sectors would definitely see huge amount of movement, and this movement will happen both ways. So, if there are sectors which would be out of favor, and there would be detrimental news coming in, or you could feel that, these sectors would not recover fast, we could see huge amount of capital outflow coming in, and in vis-a-vis where you would see a recovery or a long-term thesis not being really affected by the lockdown or the corona issue, recovery will happen fast.
Okay, got that. But I take your point about how there is no real way to assess which industry will suffer how much. So, that makes things really very fluid over the next 12 to 18 months. But Andrew, come in on this, because pharma is one space where you can say with a fair degree of assumption that things perhaps could get better for certain companies. So Glenmark, for example, is the one I wanted to chat about. It's up 80% in 1 month, and its fortune sort of turned after it developed that antiviral drug. Do you still like pharma stocks? And on stocks like Glenmark, maybe a Dr. Reddy's, do you see a further re-rating?
So just before I answer that, in terms of the question that you asked, Prashant asked, in terms of the market, I think we're all trying to hopefully look through the earnings, for this quarter and say things will get better. But, I think we need to look at it slightly differently. I think you need to look at which companies will survive this, because I don't think anyone has a clue what earnings are going to be, but not just for this quarter, but for next quarter either. And it's going to be bad, and it's really about cash flow. And that's the only thing you should focus on. Earnings don't really matter. Is a company can survive or not the next 6 months. So that's the point I would make there. So have we hit the bottom? Don't know, because there's a lot of moving parts to that. But optimism, in terms of what's happening globally, don't forget everyone's thrown a huge amount of money at it. So that's why global markets have been good and liquidity is good. And they've done fiscal packages to help industries. So our U-shaped recovery could be a very long U-shape unless that we see any kind of fiscal package from the government. So that's the point I would make there. In terms of pharma, we become more positive, last year, but obviously now is the follow-through going to be there this time for them? Now, if I just go back to, again, Prashant, you were talking about Gilead, is that whoever gets the vaccine or treatment, they're going to have to manufacture this somewhere. And, India does have that capacity to manufacture for whoever, comes out with a vaccine. And so does China. But I think India might be the favorable destination for this. So, it really is a good opportunity for Indian pharma companies to re-establish themselves again after many years of problems. So if this is the chance that they wanted, that it's open for them, to not only kind of get themselves back on the world stage in terms of manufacturing, but also help their bottom line. So this is the opportunity I see for pharma. So I don't think it's gone unless you never think there's going to be a vaccine, which hopefully that's not the case.
Well, we hope there's a vaccine anytime soon, but it seems like it's a long time away. But let's do one thing. Let's take a quick commercial break on Taking Stock. Lots more lined up with our guests on the other side, so don't go anywhere. Welcome back. You're still watching Taking Stock on CNBC TV18, where we take stock of the week gone by. The market, in fact, ended in the red this week after 2 weeks of a gain. It was a Franklin Templeton issue that really soured sentiment. The Nifty fell about 1.2%, and the mid-cap saw a bigger brunt this week, down about 2.7%. But let's listen into some market opinion that we got earlier in the week. Here's what Gautam Shah had to say about the Nifty, the Bank Nifty, and where he sees things headed from here.
I think the market has gone through volatile distribution in the last 10 days. Rallies to 9,400 have been sold into, dips to 9,000 have been bought into. But clearly, this recovery that started off from 7,500 levels is now getting weaker by the day. And I think in the next 2 or 3 sessions, you could have a snap out of this range, and it is most likely to be on the downside. So from a today perspective and for the short term, 9150 is my working number. If this level were to get violated, you could see the Nifty going back to levels of 8820, which I think is now a much bigger support. I have enough conviction on the charts to suggest that the Bank Nifty can actually go on to revisit their previous lows of 16,000 and lower. If that were to happen, I think the Nifty is not going to be spared because it moves in tandem with the Nifty.
Okay, well, we just wanted to slip in that technical opinion from Gautam Shah as well. We've been discussing fundamentals with Andrew and Ion, and Gautam's view seems pretty clear. He's more convinced about the Bank Nifty heading a lot lower to 16,000 kind of levels, which was the low in the recent cycle, and the Nifty he sees heading lower as well. Let's just use the next 5 minutes. I think that's what we've left on the show to quickly get a broad idea about where to look for opportunities. Ion, I think you said you don't want to talk about stocks, but I mean, do tell us, where are you seeing absolute upside opportunities in this market now?
Well, you know what, the way I think Andrew touched on this a bit briefly earlier. I think it's very essential to understand in this market is what will be the businesses that will survive, and what are the businesses that would. The secular long-term story is that people who are investing in India even prior to the corona and COVID crisis would actually go on beyond it. And this is not a market that you can invest on the short term. And this is a market that you invest on the long term. So from the beginning of the year, even before the crisis, the sectors that we really like and we continue to like is the insurance sector. Insurance sector, we believe, is basically is like a quasi-consumer sector in India. It is extremely well managed. It is in extremely low penetration levels. It's a great runway. There is opportunity both in the life and in the non-life space for companies to grow. That is one sector we like. There will be winners. There will be winners, and there will be businesses that may become monopolistic post this crisis. So there will be a select private banks. There will be select NBFCs which are available now at much lower valuation than what earlier. Yes, there will be quarters of pain. But at these valuations, you can acquire them for really long term. There are some select consumer companies which are still expensive, but again, from an Indian long-term story, you can acquire, you can buy them. Another sector that we like from the beginning of the year, the story still remains intact, is the chemical space. There are select names there that we like. We also like. The telecom space. We believe that the problems there are past us. So these are sectors that we essentially like.
Okay, so the telecom space, some of the select private sector banks. But I wanted your thoughts, Ion, on this whole Franklin Templeton issue. Don't you think that there could be a further pressure on the equity markets because of this? There could be some panic redemptions as well, and that could perhaps take down some of these financials that have exposure?
Well, yes, as I said, in the short term, a lot of things could happen. And as I said, I'm really not really talking on the short term focus. The short term, we really do not know what can be the panic in the short term. And in the short term, it's not just the Franklin Templeton issue, but we have, in fact, a lot of other issues that can come up. Franklin Templeton issue is something that came up yesterday, but the greater issue is what can happen with the virus issue globally. And if we have a second wave, or as you were talking earlier, the vaccine, we saw how markets reacted with the negative news on the vaccine not coming. I think that's a much greater issue. If the lockdown is extended in India for any reason, and if we have the biggest risk I feel for the banking sector is not just the issue that you said, that if we have huge amount of retail delinquencies coming in the consumer delinquencies coming. So there are a lot of issues that can come up in the short term, and if we just focus on the next 2 quarters, the scenario could be quite diabolical. But as an investor and as a long-term investor, if you're looking at investing in India, you have to look beyond this. And I keep saying, even as Andrew touched the point, you have to look at companies which can weather this storm, and which can weather this storm with their strong balance sheet, strong management capabilities, strong track records, monopolistic nature of businesses, and can weather beyond this. So that is the way you have to look at this investment space. If you look at very short term, this is not a market where you can invest for the short term.
Oh, absolutely. Andrew, what would you buy? What would you rent, as you like to refer to your actions? Briefly.
Yeah, so briefly, there's I can't talk on fundamentals because there are none. And if all companies are saying they can't give guidance in terms of profitability, and even some of the consumer goods companies like Unilever can't even give guidance, then where's the fundamentals that I can talk about? So this is really just a trading bucket. You've got to trade it like 2008, 2009, because taking views that it's all going to be fine, you're going to get whipsawed, on both sides in terms of that expectation. So I think trading is we all know the sectors to hide in, and the companies with the strong balance sheets. That's simple. That's where you hide. But stepping out there and saying I want to look at, say, the banking sector right now because it's looking cheap, it could get a lot cheaper. So I think you have to trade or rent.
Okay. All right. Thanks a lot, gentlemen, for joining us and taking us through your views and the cues for this week. With that, it is curtains down on this edition of Taking Stock. You guys stay safe. Thanks so much for tuning in.